Well, hello, everyone. Welcome to your Daily Five. I'm Joe Duarte, author of the best-selling Trading Options for Dummies. Thank you all very much for your support. The book is going to be released in its 4th edition, September 28th. And I just got a note from the publisher. I just want to share it to you. It's going to be an audiobook too, so I'm very excited. Joe Duarte, themoneyoptions.com. Please consider a free trial of my service, especially if you like what I say to you today. Well, we're going to get started here. Always at the edge of chaos. And we're going to talk about 3 indicators today that I use on a regular basis. But they're very useful when dealing with algos. So we're going to talk about accumulation distribution, on balance volume, and volume by price. And of course, you can't have a Joe Duarte talk without hearing about the algos, and we'll be hearing about them too. So as always, sound trading principles. Please don't fight the Fed. The Fed says they're going to raise interest rate. The market tanks. You can bet on it. Don't fight the market's momentum and the dominant on the ground trends. Trade with the trend. Trade with the Fed. Stick with strong sectors in the stock. Where there's strength, that means the algos are there, and that means that's where the money is. Trade in those small lots and focus on your stocks as they are relative to the market. In other words, if your stock keeps going up, the market keeps going down, stick with your stocks. Please don't be trading 1,000 share lots unless you're really loaded, because the volatility will hurt you. Take at least partial profits and you get 20% gainers. I'll tell you that if you follow the indicators that I would talk about today and Joe Duarte and themoneyoptions.com, you get your share of those 20% gainers. Want to keep those sell stops no more than 5 to 8%, because anything that drops 5 to 8% or more, the algos sell heavily. Monitor those lagging sectors for potential turnaround candidates. I'm going to show you about that a little bit later. Manage that cash wisely. Don't be in a hurry. Get stopped out. Just wait till something good pops up before you jump back into it. Big picture again, as usual, complexity zone where the market is good. That's where we are right now. Again, a new high on the New York Stock Exchange advance decline. The trend remains up. It's crazy, but there you have it. Chaos zone where things go bad. Break below that 200-day moving average on the New York Stock Exchange advance decline line. Things get ugly. Break below the 50-day moving average on the New York Stock Exchange advance decline line. Things can get ugly as well. Edge of chaos, that area between the 200-day and the 50-day, that's where complexity and chaos are just right to make things pop. So let's talk about accumulation distribution. It's an indirect indicator, and I'll tell you what that means in a second. It was developed by Mark Chaikin. I love it. The source for all this data is the chart school at StockCharts.com. I highly recommend it every time you have a question, try to figure out what's going on with your indicators. So money flow, accumulation distribution has 3 parts. You have the money flow multiplier. Here's the formula. Don't worry about it. You have a nice line, but this is important. You have money flow volume, and then you have the line on a daily basis. So key to remember here is 3 parts to this indicator. And when you see the comparison to unbalanced volume, you'll see the difference. But the bottom line is this is part of the 3-part indicator confluence that really helps us figure out what the algos are doing. Unbalanced volume, again, source, chart school, stockcharts.com, developed by Joe Granville. So this one's a little bit more simple. If the closing price of the stock is above the prior day's close, then you get all the volume for that day. Closing price below the prior day close, you get no volume. And if the closing volume equals, then it's kind of a straight line. And again, you'll see what I mean in a second here. Bottom line is unbalanced volume is more direct. Accumulation distribution is more indirect. So similarities, they're both based on volume. Volume is the key because volume means trading activity. Trading activity means that's where the algos are and that's where the money is. Very useful in trend following, useful in spotting divergences. I'll tell you all about that in a second. The difference, again, ADI is indirect, not a big deal, but it's important to remember that. Unbalanced volume, direct indicator, not a big deal, but it's important, as you'll see in a second. So let's look at accumulation distribution. We have this line down here, which is the indicator. And what you see is that if the stock closes near the middle of its trading range, the line is sideways because you got a little bit of volume, and that's just neutral. Okay. Now, if the stock closes at the top of its trading range, you got a lot of volume, you add all that volume to the line, so ADI line goes up. Now, if the stock goes up for the day, but it ends near the bottom of the trading range, you get very little volume on the indicator and the line starts trending down. So remember that you want to look at the close and the volume when it comes to accumulation distribution. Unbalanced volume versus ADI. This is a great way to look at it. And here's something very, very cool. Again, from the chart school. They can trend together. See a sideways market, they're trending together. As soon as things start popping, they start going up together until you have a big blowout day in which the stock crashes, but ends up near the high of the day. And that's when you can spot the difference in the two indicators. You can see the stock ended near the high of the day, and so accumulation distribution went up. And there was a lot of down volume because the stock got crushed, so unbalanced volume goes down. So accumulation distribution, here's a hint. One of the reasons that it does that is because it tells us about what the short sellers are doing, okay? And we'll talk about that in a little bit more detail in a second. So let's bring in volume by price. This is what I call the congestion zone. This is where the algos live. Volume by price, these huge bars here, okay? They're important, support and resistance above everything else, right? You can see there's price congestion here. When there's price congestion, there's money. When there's money, there's algos. And what the algos end up doing is what you should be doing. As a result, you see the price congestion here in this area, stock breaks out. You want to get in on this stock somewhere down here if you're following this indicator. And you'll see what I mean when we put the three of them together. The opposite here. Price congestion in this area, and you're eventually going to have a market top. So take-home message here is that volume by price is a sign of trading activity. Trading activity means algos, and where the algos are is where the money is. So let's put this all together, right? We have a stock here called Everbridge, which is a networking company that I just recommended in Joe Duarte, themoneyoptions.com. So first of all, volume by price. You have this huge cluster of trading activity here. What does that mean? That's where the money is. That's where the algos are. That's where you want to be. So you want to be there at the right time. All this noise here means that the algos and the short sellers are going after each other. You don't really want to be part of that. The key to knowing what the short sellers are doing is that accumulation distribution is going down, okay? And that means that the stock is closing near the bottom of its daily trading range very often. Short sellers love that, so they hop in, stock goes down. But guess what? Unbalanced volume has been going up here. That tells you that when the short sellers are done and the algos realize because of the trading volume flow that the short sellers are inactive, they go in and buy on the cheap. So this is a great illustration of the interaction between short sellers and algos and why you want to be in there. So remember, trending the ADI down means short sellers are active. Unbalanced volume up means the algos are picking up the stock near the bottom and cheap prices when the short sellers are done for the day. So you want to follow this stock all the way out here. And what we see is that accumulation distribution and unbalanced volume now are starting to get in sync here. That tells you that the short sellers are pretty much done, and the algos are just waiting to see what happens. Of course, you can see the price here. And as soon as the algos notice that the short sellers are gone, they start really buying in a hurry, and the stock breaks out. Okay, it goes above the 200-day moving average, went above the 50-day moving average. Edge of chaos, big activity there. Again, big activity, volume by price, stock pops. All right, so ADI helps you spot short sellers. Unbalanced volume helps you spot algos. Volume by price is your tiebreaker. It's that congestion zone. It tells you exactly where the money is, and it sort of brings you into being very active at watching that stock and seeing what happens. So to recap, accumulation distribution versus unbalanced volume. ADI is a direct indicator. It's got three parts. You have to watch where the stock closes. Good indicator of what short sellers are doing. Unbalanced volume, direct indicator, tells you what the algos are doing. Both are useful in trend following. Both are useful in spotting divergences. They're better when used together with volume by price. Remember, ADI helps spot short sellers. Unbalanced volume is a better indicator of algo activity. Finally, let's always remember, trading is uncertain and we should always be prepared. Joe Duarte, author of Trading Options for Dummies, #1 bestseller options book on Amazon.com. Thank you very much. Please get a free 30-day trial subscription to my website, and look forward to the 4th edition. We'll talk again.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.